Crypto. All the crypto news in one place.
Here's the answer most people don't want to hear. The cycle isn't dead, it's evolving. Each halving still reduces God damn it. Nico's literally killing me right now. Each halving still reduces new supply, sets long-term bullish bias, and anchors market psychology. But the clean textbook pattern on price, that's probably gone. Instead of boom, bust, repeat, we're shifting towards liquidity waves, consolidation, and structural upside. So fun. Bitcoin has graduated. It's behaving less like a meme asset college frat boy and more like a monetary infrastructure suit-wearing politician, except way less corrupt.
I think the price is the least interesting thing about Bitcoin, because the reality is that you have a real problem. Everyone who's using fiat money has a real problem.
Well, the primary suspect is sitting right there on Wall Street: ETFs. Since their launch in early 2024, the spot Bitcoin ETFs have sucked up over $100 billion in assets. This has been incredible for price appreciation, sure, but it's come with a hidden cost: the death of volatility. Back in 2012, Bitcoin's volatility was over 200%. Today, it's hovering around 50%. The ETF effect has essentially smoothed out the cycle. Think about it. In previous cycles, retail investors like you and me drove the price. But retail is emotional. Retail FOMOs in all at once, creating that vertical God candle, and then panic sells all at once, creating an 80% crash. But now, institutions hold nearly a quarter of the supply. Pension funds and corporate treasuries don't FOMO into a green candle on a Friday night.
Still, I know what I've said here. Historically, in the first few days of the year, we tend to see a big rally towards the upside. And of course, currently it's January the 2nd. Everything can still happen, but still, this is a most likely scenario that we are at least going to experience some big volatility during the first few weeks/days of the year here. So that is, of course, something I am still expecting, because also if I'm looking, for example, at the Bollinger Bands with indicator, we're seeing that the volatility is right now at historical lows, even lower than certain levels in 2025. And historically, whenever volatility is low for a long extended period of time, usually we tend to see a big breakout emerging. So that is, of course, exactly what I'm currently expecting. And if I'm looking at most of my Fibonacci charts there, and for example, this is the one I talked about in the intro of today's video, I've set it up from the exact bear market low to the exact bull market high. And if you're done then just looking at these levels, it all makes a lot of sense here. First of all, the golden pocket entry, which is historically the biggest and best level where you want to be accumulating, is around $57,000 to $55,000. Well, that level exactly.
Here's a headline: Bitcoin RSI demands breakout as exec says RIP to the 4-year Bitcoin price cycle. So of course, we've been talking about the price cycle being broken because this time is different. For the first time ever after the halving year, we closed the year on a red or in the red. So the yearly candle was red instead of green. Usually it's 3 green followed by 1 red, which is the bear market. Now it's only been 2 green followed by a red, which was 2025. So this time is different. And it's been different since the beginning of the bull market. If you recall, the Bitcoin halving, the price hitting new all-time high before the halving, and that was because of the Bitcoin ETF launch. So since then, it's been different. You can't argue with that because we've seen historically those things have not happened, but they have happened this cycle.
The 4-year cycle, as we know it, is dead in the sense that returns have flipped in year 3. From positive every single year, or every single cycle, we've seen the 3rd year be positive, the 3rd green year in a row, and then 2025 was actually negative. However, the timing of the top of the bull market is still actually the same. So in a way, the 4-year cycle is dead, the 3 years up, 1 year down, but in terms of timing, it was very similar. It was the same quarter that we always see the tops. It just wasn't as exciting a top as some people thought. Now, what we're seeing today is we're seeing some pretty good accumulation from a couple different companies, some big companies buying Bitcoin and buying Ethereum. We're seeing some interesting things from long-term holders. I think retail will be thrown off again, but I want to walk you through it. And we actually have long-term holders accumulating Bitcoin once again. You can see the long-term holder supply net positive change over the last 30 days just flipped positive for the first time since mid last year. Pretty bullish.
Now, Saylor claims the best thing a company can do is buy Bitcoin. Well, that's basically all Master did, and the strategy destroyed shareholder value. It definitely destroyed shareholder value, but he didn't just buy Bitcoin, okay? Don't listen to Peter Schiff. He's been bashing Bitcoin for over a decade, leading his followers into absolute poverty. What strategy is doing is borrowing money from the company to buy Bitcoin. That's leverage, guys, okay? Collateralized loans, whatever you have to say about it, this is leverage. And that is why it's down pretty much 48%. Now, here we go. Here's a beautiful chart of MicroStrategy here. Oh, look at that. Look at that red line all the way down. When this thing goes bust, this is going to be a brilliant opportunity to buy more Bitcoin. And you may think, oh, Bitcoin's going to be dead by the time Master just gets destroyed. No, that's not true at all. Bitcoin is going to be just fine. It was just fine for well over a decade before Saylor even knew about Bitcoin. And it's going to do just fine in the future without Saylor. It's going to be a great time.
South Korea crypto whales are growing. You know, someone who was in the comment section and I read that post a while back, that crypto isn't sexy anymore. It's not cool, right, in the US, and that, you know, the youngsters aren't coming into the crypto market anymore. That's in the US. And maybe that is overblown too. But in South Korea, people don't have access to maybe things that have in the US, and the rest of the world doesn't also. And over 10,000 investors now hold over 1 billion won each on exchanges. That's around 750,000 per person based on financial supervisory service data. And that's a lot, right? And I think, you know, it's probably more if you watch any South Korean shows, you know that they are very into finance and investing and crypto.
Everyone is talking about stablecoins. It's going to go to, 1 trillion, 2 trillion, 3 trillion, which it is. But you have to ask yourself, when the stablecoin market does reach $3 trillion in total supply, not 30 trillion, 100 trillion, 3 trillion, we're going to, start off small. How does that money move, right? Because you do understand that stablecoins are still in a siloed ecosystem.
The second key thing is, I think, liquidity. So you think about FX markets in 2024, there was upwards of $200 trillion in FX volumes, but in stablecoin volumes, it was like $25 trillion, mostly through speculative trading. So the next challenge that we have as an industry is to now create the breadth and depth of liquidity for stablecoins across key currency pairs like AED and others.
USDC doesn't do your FX. USDT doesn't solve your cross-border liquidity, is what Ryan Rugg is talking about. Stable coins are denominated. They sit inside their own currency walls. You still have walled gardens. There are no liquidity.
Crypto exchanges are not safe. It does not matter the size of the exchange either. Bybit, the fourth largest crypto exchange by trading volume, recorded one of the largest crypto hacks in history back in February, where $1.4 billion was stolen. And if we're looking at some of the top 10 crypto hacks in history, most of these are resulting from major exchanges. So where do we store our crypto outside of cold storage devices?
Okay, final news item. The Trust Wallet browser extension knocked offline by Chrome Store bugs, CEO says. So recently, the Trust Wallet has had an exploit, and they did make it right by making sure they're going to help victims with the $7 million Christmas hacks reimbursement. So though it looks like it's been kicked out of the Google Chrome web stores, or is temporarily unavailable. So just heads up, I would avoid using the wallet. Obviously, if you got hacked, I'm sorry. And but at least you're going to be made whole with the funds they're going to restore. But if you're a new user, I would stay away for now. Stay away from now. Just be careful, right? As always, don't trust, verify, guys, because we need to make sure this is not an ongoing issue.
This was the headline, okay? Iran offers to sell advanced systems, right? I don't know about this word and what the thingamajig will do here, but ballistic missiles, drones, and warships to foreign governments for crypto, right? according to the Financial Times. Now, this could be Bitcoin, XRP, whatever the Iranian government currently wants. Now, if you don't know, the current situation in Iran is very combustible. There are protests going on all around the country. Their economic situation is in a big pickle.
Now, with that, this is some big news, so it needs discussed. It says the firm behind the U.S. President's Truth Social platform said it will issue a new cryptocurrency to its shareholders, making the Trump family's latest foray into digital assets. Or marking, sorry. The digital token from Trump Media and Technology Group will add to the Trump's crypto ventures, which have generated hundreds of millions of dollars so far. Trump Media unveiled a new token on Wednesday and said investors will receive one for each share that they hold. Trump, who is himself the largest Trump Media shareholder, has supported looser regulations to the cryptocurrency sector. Trump Media shares rose on Wednesday following the firm's announcement. Now, we don't know when they're going to issue this. We don't know what the price is going to be valued at. We don't know what it's going to be worth. But we do know they said you can get some, sort of benefits by holding this. You're going to be able to get cheaper prices and so on different Trump Media exclusives.
Believe truly that clarity coming to this market is going to allow that transfer of wealth to happen more so than anything we've seen in the past. So one thing that we're going to be looking at very closely is January 15th. There's no specific day for when the Senate is going to pass the Clarity Act, as it's not yet advanced beyond the planned committee markup targeted for January 15th. 2026 this year, with full Senate floor vote dependent on subsequent bipartisan negotiations and scheduling. So as we move forward in 2026, we're going to stay laser focused on what is coming in terms of fresh capital to this market, regulations to this market, and any new developments.
So my number 2 macro thesis is the Fed will lower interest rates, which will give us more of a risk-on environment. And it looks like rate cuts will accelerate. At least that's what Trump wants. Just 2 weeks ago, Trump said he believes the next Fed chair will lower interest rates by a lot. And the prediction markets are agreeing odds are whomever replaces Jerome Powell will be friendly to Donald Trump. Trump even said anyone who disagrees with him will never head the Federal Reserve. So how am I investing? Well, if we see unexpected rate cuts, aggressive rate cuts, I think that's full risk on signal. I think strong L1s are going to benefit the most from that.
Now, as far as the Fed, okay, let's talk a little bit about the Fed over here. The Federal Reserve pumped a staggering $31 billion into the U.S. banking system overnight. And this was done this was done via overnight repos. Banks needed short-term cash, signaling tight liquidity. The Fed stepped in to keep funding markets stable. Added liquidity can support risk assets in the near term. The banks are in trouble. Absolutely in trouble. And the fact that the banks are having issues with liquidity and they need short-term cash, that should absolutely terrify you. What they're doing is they're going to prop this market up. They're going to prop the banks up. They're going to prop the traditional financial system up while we, the American taxpayers, we keep funding it because this is our money.
And we have China officially designating silver as a critical mineral and placing its exports under state control allocation for 2026-2027. They are keeping the silver to themselves as it becomes very, very valuable, one of the most valuable assets in the world. And we have only 44 companies allowed to export silver. We have national security cited, and this is part of China's response to U.S. chip restrictions and tariffs. This is not about jewelry. This is about solar, defense, electronics, and strategic supply chains. And when China controls supply, price discovery moves from paper to physics. So this means, again, guys, we're about to see the price of physical silver go absolutely parabolic and the paper price of silver following after.
We're still facing on the monthly time frame is just a higher time frame indicators of what's happening in the market. You know, as we end 2025, we're in periods like this that were very similar to 2021, where prices rallied on a second new high here for Bitcoin, but they do it on reduced reduced strength both times in here. Now we've got the cross, and the market has acted very similar to 2021 in that it's really just kind of all of 2025 was really just a bear market. And I think everybody has a hard time wrapping their heads around that, thinking, why did the price action of 2025 stink so bad? And it really comes just to being very similar to 2021, where all of our hype, all of our excitement, remember this, Wall Street bets, Elon Musk, laser eyes, diamond hands, all that excitement takes place back over here.
Going back to this yearly chart, look at it overlapped on the yearly chart. Here's 2013 candle. What do we have going on? Expansion. Here is the 2017 candle. Expansion. Here's last bull market. Expansion. Well, why do you think potentially we just got a red? Like, how are the cycles broken? How's the 4-year cycle broken? Because 4-year cycle theory has been built very much strongly revolving around the Bitcoin halvings. The 4-year cycle was a complete coincidence built around the business cycle and liquidity and Fed monetary policy. That's what it has been. And since we went into record-breaking, for only the second time really ever, quantitative tightening, we went in through years of just liquidity being drained from the system. Guess what? Right now, that just ended on December 1st. And look at actually this chart starting to tick to the upside. This is the Fed balance sheet. That's what this is. So if you want to know why the 4-year cycle is broken, it's because of this chart. It's because of the PMI business cycle chart. And by the way, we print a new candle tomorrow, January 2nd. It's a big deal.
Bitcoin. Oh, what are you doing, buddy? I see you here. Bitcoin closed the daily candle yesterday just above the 20-day EMA. Now, we've seen this a couple times before, especially on low volume, as we have right here. You can see very, very low volume on these moves, which I do not love. Don't love that, okay? Yesterday was New Year's, though. Of course, you're going to have low volume. Anyway, regardless, it is a close above the 20-day. Current price action was still up 12 hours to go for this candle close, also above the 20-day EMA. Yellow line on the chart here. Now, we are in a very, very critical zone here because breakdown from this support line, that's the bear flag line, by the way, on top of it drawn on right now to keep chart a bit simpler, but the breakdown from that basically sends us down to about 75K. The breakup here back to the key EMAs, the 200-day EMA, the 50-week EMA, the big fat 100K round number, all that kind of stuff. Well, that's the approximate breakout target, but also the top of the bear flag. So this is going to be the maximum danger zone.
Thanks, guys. Again, very, very exciting stuff. This is also based on the Fibonacci levels as well. And we have Bitcoin flashing its 5th golden cross, and we had the first 4 all leading to explosive rallies. Now we have the 5th one printing, and everyone is bearish and bored. So historically, this has the 100% win rate. We had the golden cross, and so guys, we are expecting a massive pump to happen for Bitcoin as well, as we do have another golden cross. And this is happening as everyone is scared, bearish, and bored. So this is the perfect time for the 1% market makers to reverse the market and for retail to enter in at a higher price, acting as exit liquidity.
So, did you enjoy the that? Let me know in the comments.